This is the Business Lens, where we go beyond the headlines and make sense of the numbers shaping your money, your business, and Nigeria's economy. Good morning. My name is Divine Alex. Stay with me. Let's connect the headlines to your business, your money, and the economy. Now, let's start from the top. Let's begin from the global economy, because before we talk about Nigeria, it's always important to know what's happening around the world. Now, the International Monetary Fund is warning that global inflation could rise from 4.1% in 2025 to 4.7% in 2026 this year, driven largely by fresh geopolitical tensions in the Middle East. Interestingly, while conflict is slowing global growth, artificial intelligence is helping to keep parts of the global economy moving. The question now is, what could this mean for countries like Nigeria that are still trying so hard to keep inflation under control? Now, if the world is becoming more uncertain, how exactly is Nigeria preparing? I know that's the question on your mind. Well, one answer appears to be gas. The government says it is no longer just talking about Nigeria's gas potential, it is investing in it by backing 113 gas infrastructure projects across the country, from gas processing plants to CNG stations and LPG depots. The goal, they say, would be more jobs, more industries, and hopefully cheaper, cleaner energy. Now, some of these projects are expected to come on stream before the end of this year. So perhaps the question isn't whether Nigeria has enough gas anymore. Yes, we've exceeded that part, but rather how soon Nigerians will begin to feel the impact of the resources we have about. Now, and while government is betting big on gas for the future, here's some good news from Oil Today. Nigeria's crude oil production climbed to 1.56 million barrels per day in June, the highest monthly crude output we've recorded since April 2020. Now, even more interesting, that means Nigeria produced 104%. Yes, of its OPEC quota, while total crude and condensate production reached about 1.74 million barrels per day. This is interesting, right? It's also the fourth straight month of production growth we've seen. We also celebrated that of May, and now we have something new for June. Now, higher production is certainly good news, like I said, but the bigger question is, when will stronger oil output begin to translate into stronger government revenue and real economic benefits for Nigerians? That is the question we're leaving out there for them. Now, producing more energy is one thing, delivering it efficiently is another. And that's where electricity comes into the picture. Now, here's something many Nigerians may not fully realize yet. Not all the electricity generated in Nigeria ought to actually get to homes and businesses. I know you suspected this, but here's the gist. According to the electricity regulator, transmission losses cost the power sector about 2.61 billion naira in just the first quarter of 2026. Now, this is crazy. In simple terms, some electricity simply got lost before reaching the distribution companies. Can you imagine this? Now, imagine producing a product, paying for it, but never delivering it to your customer. What are they saying? That's the challenge the industry says it is trying to fix. Well, who knows when the government will stop taking us to Netflix and chill over this power sector shenanigans. We'll get there, I'm sure. Now, let's head straight to the next one, where we are going to have to leave the energy sector and follow the money. This is a number that really caught my attention. 31.32 trillion naira. That's huge, right? I know. That's now the size of Nigeria's pension assets. And PENCOM says it wants more of that money working in the capital markets to support long-term investment and economic growth. Before anyone gets worried, hold up. I know. No, nobody is taking your pension away. Yes, you heard that. The idea is simply to make those long-term savings work harder while keeping them safe. The bigger question is, can pension funds help grow the economy and still protect retirees? That is the question we're going to leave out there. Now, let's check on another market that quietly tells us how money is moving. The foreign exchange markets last week activity in Nigeria's FX market slowed sharply with total transactions falling almost 47% to about $1.63 billion, which is down from just over $3 billion the previous week. That's the biggest weekly drop in FX market turnover we've seen this year. Now, before anyone panics, a drop in trading doesn't automatically mean something is wrong. It simply raises another question. Are businesses and investors becoming more cautious, or are they simply waiting to see what comes next? Now, let's step away from that. While one market appeared to slow down, another one was quietly, gradually, in a quiet way, staging a comeback. So let's check the mood of investors on the NGX. And I think the Nigerian Stock Exchange deserves a little applause this week, especially after that painful June correction. The market bounced back strongly. Although Friday's trading was almost flat, the real story is that investors added about 9.34 trillion naira in market value during the week. And that is the strongest weekly recovery since June's sell-off began. Now, not everyone celebrated though, because we had Guinness Nigeria lose almost 10%, wiping nearly 80 billion naira of its market value in a single day. So has confidence truly returned, or are investors simply taking advantage of bargain prices? Now, let's step away from that and get to another one that is also interesting. While the stock market was celebrating, government was also inviting investors to another party. Now, imagine you. One person is giving you this party, the other hand is also giving you something, and you just caught in between trying to decide. That is exactly what happened. The central bank plans to raise 2 trillion naira through treasury bills in July alone as part of a much bigger 5.8 trillion naira borrowing program for the third quarter. Even more interesting is the first auction attracted bids of over 2 trillion naira, showing just how eager investors are to lend money to government. So here's the question. With returns like this, could treasury bills become the biggest competition for the stock markets? We'll discuss that. And if treasury bills weren't enough, government also dangled another carrot before investors last week. The July FGN savings bonds offered returns of up to 15.716%, the highest rate this year. The subscription closed on Friday, yes, and while we are still waiting to see how much was eventually raised, it does tell us one thing: the competition for investors' money is getting even more intense. So let's put all these pieces together. The stock market is recovering. The treasury bills are attracting massive demand. Government savings bonds are offering their highest returns this year. Pension funds are looking for more investment opportunities. So where is the smart money going? And perhaps more importantly, what should businesses, investors, and even everyday Nigerians be paying attention to? This is what we'll be discussing, we'll be looking at after the break. My name is Divine Alex, and this has been The Business Lens on Rapid Television. Stay hitched. We'll be right back. Okay, you are welcome back. This is still The Business Lens of Rapid Television. Now, let's talk about money, right? Because if you've been following the markets lately, you notice something very interesting is happening. The stock market is smiling again after that painful June sell-off. At the same time, government is borrowing more through treasury bills, offering attractive returns on savings bonds. You know, money can be funny. This week, one part of the market is saying, come and buy shares, come and buy shares. Another is saying, no, lend money to government instead. So if you are an investor or you're simply trying to make smarter financial decisions, who should you listen to? That's exactly the conversation we're having this morning. And I couldn't have asked for two better people to help us make sense of it other than Victor Odulate, who is the wolf of the NGX and the CEO of Finance with Mukta himself, Mukta Mohammed. Good morning.
Having me. Good morning, Divine.
Okay, it's great to have you here. Victor, are you here? Okay, so let's start with the bigger picture. Now, just a few weeks ago, we were talking about the market's worst monthly decline in June. And then fast forward to today, we've seen one of the strongest weekly recoveries of the year. What exactly changed? Was it confidence returning, or maybe bargain hunting, or something else that is, the reason behind this? Wolf, are you there?
Yes, I'm here. So I personally believe that the new interest in the markets was driven by a number of things. So the first one, like you said, would be institutional bargain hunting, in the sense that after the pullback, we lost so much value in the market that people started seeing that these prices that we now have are too cheap for certain stocks, right? And we saw people come in and decide that they're going to defend these stocks, both on the retail aspect and even among institutional players. In addition to that, news is one of the biggest things. We saw people report that the NGX is
Mm-hmm.
now the biggest of all, the best performing, I beg your pardon, of
Okay.
all the world equity markets in dollar terms year to date. So something like that is a catalyst. It gives a confidence boost both to people inside the country and even beyond. And then towards the end of the week last week, we saw that the S&P Dow Jones were putting Nigerian market on the watch list to be reclassified as a frontier market. And all these things, when you put them together, from the bargain hunting to the proof of concept when it comes to the performance so far, as well as the fact that indexes worldwide are now watching the market, all these things together make it look really good for the market as a whole.
Okay, now you mentioned something about putting the NGX on the frontier market. Can you shed more light on that?
All right, so the retail market is one aspect of the market. That's where individuals like you and I often buy. But the institutional players are also very important. Now, while Nigeria does have a very deep institutional player market, the pension funds, the wealth managers, and what have you, we also have international institutional players. Now, a big way to recognize a market is by classifying. So you have the major markets, the likes of the United States, the United Kingdom, and so on. We also have the emerging markets like China and the likes. Then beyond them, we have the frontier markets, right? So the whole point of the Dow Jones Index and previously the FTSE Russell looking to reclassify the Nigerian market as a frontier market is a show of confidence that there are certain concepts and there are certain rules that have been put in place to ensure that the market is high fidelity, high trust, and high performance. So it is like a stamp of approval that the market is improving in quality and in depth. So when they say they want to reclassify, looking towards 2027, it shows that the market indeed is being recognized internationally. And if it is reclassified and is added to an index, it means that institutional players will almost automatically invest some of their money in the market.
Okay, so what signal should ordinary investors take from this recovery?
Personally, I would say position early.
Okay.
I remember seeing the news about 3 months ago that the FTSE Russell was the first to attempt to reclassify or look at reclassifying. This would happen anywhere between September and maybe the first quarter of next year. So before the big money comes in, you want to be positioned early, because when the money comes in, like I said, you can imagine what $1 billion, for example, will do in the Nigerian market. So when this big money comes in, it's going to carry particularly quality blue chip companies higher. So my opinion is that the position early.
Okay, let me get Mukhtar Mohammed's view on the market recovery. Mukhtar, are you there?
Yeah, thank you. Yeah,
Okay.
Divine, I'm here.
So when you saw everything that happened, what would you say to that?
Well, market recovery, if you're a student of the stock market, you shouldn't be surprised what has happened, because normally after the earnings season, you see those investors now reshaping their portfolio to move from one equity to another after dividend payout or after markdown, after first quarter result, in anticipation of the second quarter result. You see those changes. You have to say, why did we get to where we are? Number one, don't forget that why the market started nosediving, we had a T+1, and it came in, immediately came in, we saw the market going down. Also, we also got that holding structure news from the Central Bank of Nigeria, whereby some banks were asked to. There was a proposal on the holding structures of some of these banks. So that also got investors a little bit apprehensive about what's going to happen. Then you have profit taking also. Definitely was part of what drove the market to where it is. Then you have that Fusoro also comment that came in, suspension of us being, not suspension, reviewing of us being back in the frontier market. That also added to the apprehension in the market. So what has changed that you see this recovery? Bargain hunting is part of it. Value investment also is also part of it.
Okay.
And also some of those news were addressed. The T+1 was being addressed. The regulators came out to say, look, it's the best global best practices. So investors got more confident in that, getting to hear from the regulators. Profit taking in high cap stock reduced, and there was now an opportunity for investors to reposition themselves in some of those equity. And again, the banks we are hopeful that this week we get a response on did this proposal of the holding structure gone through or not. But again, those are part of the things that really affected the market. And if you look at some of these things that I just mentioned, they are not fundamentals. They are actually regulatory induced, investors' perception news from the market that was translated based on individual assumptions. So the fundamental of the market is strong. And so a lot of investors are now going beyond the news and looking at the fundamentals. So they saw a good entry point.
Okay. Now, the stock market is recovering, right? That's on one hand. We had the CBN that it plans to issue 5.8 trillion naira in treasury bills this quarter, beginning with 2 trillion naira in July alone. Does that create competition for the stock market, Mukta?
There's always been competition, so it's not new. But what you say is we have different type of investors in the market. So for those that are risk averse, the people that are conservative or trying to preserve wealth, or people that don't want to take risks, this is good news for them. So definitely they will be playing that space. So now for those are still people that want to take high risk because they want to get high return, this is also good news for them. How? Because when you look at the treasury, the bond market, the treasury bill market, the money market, you realize that if you look at the bank balance sheets these days, you realize that the banks are the major player in this space. So what it means is that as a high-risk investor, I will be pitching my money in the financial stock, knowing that they will also benefit from this high interest rate that is coming in from the auctioning that is going to happen. So definitely, yes, some people will be in that space, but some people also will see that space as an opportunity because they know the financial sector, the banking sector will definitely be one of the key players in that space. So like I said, it depends on what you're doing. But the only bad news is for the SMEs and smaller businesses. Okay. What it means is that they are going to still go to banks and borrow more. Borrow at a higher rate because the government is crowding out every other people with very fantastic returns and safer return compared to investors trying to small in business trying to call up investors to invest in their business. So that for me is the major challenge. But for an investor, it also creates an opportunity for you to preserve your wealth that you have made in the stock market. If you look at the year to date, the stock market gives you a return of 50-something%. So you might just be looking for a safe level to preserve your wealth, looking for a good opportunity to come back to the market. So it all depends on where you are. Though the competition is always there, but what type of investors that you are determine the space that you play.
Okay, let me come back to Wolf of the NGX now. Can attractive fixed income yields slow down the momentum that we are seeing on the NGX?
I would say that it is possible, but I
Okay,
won't say
how?
it's automatic.
Okay.
In the sense that we know for a fact that
these, like he said, it's competitive, right? There are risk-averse investors that prefer to just park their money and know that they are definitely going to get, returns, right? And like I usually say, the government by default effectively sets what is known as the risk-free rate, right? So the T-bills and the bonds, the rate that is given there is effectively risk-free because the odds of the government not paying back is very minimal, right? So it means that any other investment class needs to outperform that rate by a bit because you're taking on more risk. If you're borrowing money to companies or if you're investing in companies, you are taking more risk than just giving your money to the government. So it is going to be enticing to, of course, risk-averse investors, and of course, the ones that sit on the fence that just look for the best value for money, right? They might look at it and say, okay, instead of depending on 8%, 7% dividends in the stock market, they might rather just go for 15, 16, 17% in the debt market for sure.
Now, the CBN was looking to raise 700 billion at its first July Treasury bills auction. But then we had investors come with about 2.03 trillion naira in bids, and government eventually allotted over 1.06 trillion naira. What is the market trying to tell us about this? Is this a vote of confidence in government securities? Or maybe investors are simply still trying to navigate or struggling to find better alternatives? Which of them?
I think it's a mixture of many features because in finance, in the capital market, there are many factors that come to play at the same time. So the first one would be, like I said, like you said, rather, a vote of confidence that these yields are attractive and they want to subscribe to those yields. So it's now left to the government or the CBN to carry out what is known as price discipline, strict price discipline, to ensure that they don't, give a yield that is going to handicap or hamstring the government in the future. Then another factor would be the fact that while we have seen a very good rally so far this year, people are looking, both retail and institutional players are looking to ensure that they, are not over leveraged in one particular area or the other. So, for example, if you had a 60-40 portfolio split initially, 60% in stocks and 40% in bonds, so far this year, you would have become overweight in stocks because stocks have outperformed bonds. So it might be a good time, being the midway point of the year, to de-risk some of those assets and take a bit from those stocks and then put it back in the bonds to ensure that you still have that solid foundation to withstand any shock that the market can face.
Can bring. Okay, let me come back to Mukhtar because he was the one who mentioned SMS, small, medium enterprises. Now, should businesses be worried that so much money is flowing into government instruments instead of productive investments in the real economy? And how much should they worry?
They should worry very well because what it means is that your lending rate is still going to be very high. But again, we're talking about the SMEs, but other maybe mid-cap business and bigger business have come up with a strategy going for commercial papers, 22%, which is also outshining what government is giving. But like my colleague said, it comes with a higher risks because again, with government, the risk is safer. But with those businesses, you are going to be paying more for it because of the risk that is involved. So but by and large, definitely, smaller business are the ones that will bear the crunch because again, they have to look at other means of getting funds to expand their business beyond this current means because again, in this current means, they have been crowded out.
Do they even have options to look at right now? If we look at the fact that, okay, you're saying, they should really worry. What options do you think they have?
There's always an option.
Okay.
Like I said, there's always an option. There's angel investors. There are a lot of investors that you can push in. But the conventional way, which is the easier way, it doesn't look so easy because of the rate. So that is the challenge. But to say they don't have a way around it, I don't think so. I think they have a way around it. But again, the challenge is what is the cost?
What is the cost
of what you are doing and what you are trying to do?
Okay, now, Mukta, government is also offering up to 15.716% on FGN savings bonds. We mentioned it earlier, which is the highest this year. I think as they're trying to do
And the
something.
bank,
Yes.
in spite of that, what is the inflation? What is inflation?
Our
Inflation is
inflation,
about 15%.
yes, it's 15 points.
At least
Yes. Now
seven something.
okay, now
So
for
what you are saying is that government is just giving you based on their inflationary pressure. And
oh,
once you are not making above the inflationary rate,
mhm.
what it means is that you are losing money in one way or the other. So if you're an investor, you're excited just to stay within the threshold of the inflation of it, then you are excited about it because that means you are within the threshold of inflation, you are not losing money. But if you are an investor, you want to make more money, you don't just want to sit down at the threshold of inflation. So it's like I always say, it's always determined by what type of investors that we are dealing with and who are really playing the fixed income market.
Okay, now for someone that is watching us this morning with some money to invest, how should they think about choosing between stocks, treasury bills, saving bonds, or any other, something very attractive in the markets, Mukta?
Look at inflation. It's the key. So inflation is what drives down your money. So what is inflation? What is the treasury bill giving you? What is the savings bond giving you? What will you get in the stock market? Don't forget in the stock market, you have what we call the twins reward, which is come in terms of capital appreciation and dividend payments. For the fixed income, for the treasury bill, is a fix. But what you get here, you can collect it upfront. So then in the stock market, it's liquid in the sense that you want to sell when you want to sell, how much you want to sell, you can get it sold and immediately get your return. But in this part of the market, you may be asked to take a bite of your revenue, and it's not as liquid to get more people to want to buy. So those are part of the things that an investor should be looking before saying, okay, what is the decision? So if you look at all these decisions, if I am you, I definitely will want to spread my risks because again, and also in spreading your risk depending on your age, like I keep saying, if I'm in my 60s to 65, I want to preserve my wealth. So I'll keep over 60 to 70% in the fixed income space and just get the other ones into the equity market in value investing stocks. And then if I'm a young person, I will then do the reverse. I'll have about 80% of my money in the equity market, while 20% go to the fixed income space. And then from there, I grow my wealth, watch the market, and see more opportunity in terms of moving my funds from one equity to another.
From one equity to another. And you said that they should really watch the inflation rate. Inflation rate is 15.93% right now. And they had 15.716% interest that is, given to them now.
What they are giving you is not beating inflation. So you are losing money.
That's a step. Okay, now let me come to a Wolf of the NGX, Victor. Victor, what is your take on this?
I agree with him. I mean, it's in the name Wolf of NGX. I am heavily invested in the NGX, and I try to spread that awareness and enlightenment with the people that are, subscribe to what I follow or what I do.
Okay.
I personally believe that for young people, particularly people in their 20s and 30s, they should focus more on the equities markets because they have a longer time horizon to ride out any corrections. Because if you were to look at the market over any 20, 30-year period, you end up finding out that the market ended up outperforming, fixed income. They ended up performing other investment avenues, right? So it is essentially, in my opinion, the most optimal for younger people. And like Mr. Mukhtar said, for older people, is the reverse, right? Because they don't have that much time. They can't take on much risk. And usually they have a larger amount of money on the table. So you wouldn't want to risk such large amount of money that you spent 20, 30 years of your career accumulating on, stocks. So you might just want to have some exposure to dividend paying stocks. And then on the other hand, have exposure to, the fixed income place where you know that you can at least preserve your capital.
Okay. Now, 15.93% year on year. Now, let us also look at this. The subscription window has closed last week, Friday, but we are still waiting to see how much investors committed, with returns of up to 15.716%, the highest this year. So, what level of demand would you expect, especially considering the strong appetite we already saw at the recent Treasury bills auction? Wolf? Wolf, are you there?
Well, I believe that, yes, I'm here.
Okay.
I believe that with this trend that we've been seeing inflation rise from about January till now. We've been seeing the rates also rise. That's from the fixed income markets. The rates have been rising too consistently over the last 3-4 months. And we've been seeing very high demand for these investment securities over the last few months as well. So I still expect that it's going to be fully subscribed and probably even oversubscribed by quite a margin, because like you rightly said earlier, it was oversubscribed by over 200% the last time out. So I believe that such a thing will, continue for the next, that's the July that we're waiting to see the numbers of.
The numbers, yes. I think they said July 15th before we could not get to see how many people jumped on that. Now, let me come back to Mukhtar. In all of this, I have a particular thing that really caught my attention, because it wasn't just how much government borrowed, it was the appetite. Investors overwhelmingly preferred the one-year Treasury bill, even at a higher stop rate of 17.70%. Thus, that suggests the market expects interest rate to stay elevated for longer, or are investors simply trying to lock into these attractive yields before they begin to fall?
Well, you have to say, who are these investors that are playing the Treasury bill space? Okay. So we need to get it. So, and why is it these investors that are playing this space, they are the short-term investors? Who are these investors? You have to look at the insurance companies and the banking sector, the banks. Like I said, through their results, you see a lot of them are making more money in securities, investment in security, especially bonds and treasury bills. So definitely, that's why you are seeing those over subscription, because they have the money to be in the space. The insurance sector, they're talking about recapitalization, so they're looking for a way to get more liquidity into their system that will make them pass through the recapitalization sector. The banks are also out of it. I mean, they are recapitalizing. There's a lot of liquidity in the system. They are looking at how to give turnover to their investors. So definitely, they are also looking at that space for the short-term gain that it provides for them, and they are trying to cover up some of the losses that they have suffered in the non-performing loans, and they are seeing this as a safe haven. So that's definitely why you are seeing that huge drive of a lot of investors in that space. It not necessarily means that there are retail investors that are really there. They are really institutional investors, especially through the insurance sector and the banking sector. They are the one playing that space. Do we see rate elevated? Of course, definitely. I've said it over and over. If you are a student of the CBN, you follow the CBN, you might not see rate extremely elevated, but we will see rate being maintained again consistently, because the CBN is trying to manage liquidity squeeze. They are trying to deal with inflation by managing liquidity. And you are going into an election year. An election year in Nigeria keeps saying is the movement of liquidity from point A to point B. So definitely, we might see that elevation if the CBN really want to deal with the root of the matter. But again, when you are raising that elevation, then people are asking you, why are you raising the rate when inflation is coming down? And they will have to look for a way. So what we will see that they maintain rates, and then they think of how they can more reduce the liquidity in the system. And in so doing, you also are dealing with the most vibrant sector in the Nigerian economy, which is largely driven by liquidity. That is the SMEs, the smaller business. So it's between the devil and the deep sea. Definitely, they have to deal with the monster inflation, but in doing that, they must be cautious also that they don't kill smaller businesses.
That is really interesting. Now, you mentioned the business people. Now, let's look at it from the business part, right? If you are a business owner planning to borrow, or an investor deciding where to put money, what message should you take from this auction?
Well, safe havens, go for the fixed income. That's all the message. That's telling you that government have crowded you out of business. So the only way you can do, make sure your money is working for you. And then if you're a smaller business, you want to expand, then begin to look at your commercial paper as a means to reduce your cost of financing. That's what it just means.
Okay, let me get to Wolf of the NGX. Victor, are you there? Now, one interesting thing happening now is that government is borrowing aggressively while the stock market is also attracting investors. Is there enough liquidity in the system to support both? Or could one eventually, do something to the other?
I believe that Nigeria has a very, very deep capital base.
Okay.
And as we have seen so far, in the same year that stocks have had basically their best year on record in probably the last 15, 20 years. We have also seen the government borrowing, record amounts, and not just borrowing record amounts. We are seeing record demand for it. So far, I personally believe that for people, younger people, and even institutional investors that want to get some exposure to high growth opportunities, the stock market is there. But for hot money that perhaps are from abroad, and want to lock in some clean, safe returns, they can look at the fixed income market. So I believe that the sky is wide enough for all birds to fly. I think currently they are meeting all the demand.
Okay, so what should businesses looking to raise capital be watching right now?
Well, businesses looking to raise capital, unfortunately, like Mr. Mukhtar said, they have been crowded out a little bit. Yes, they could still issue, debentures, commercial papers, and the likes. But based on what I said at the beginning, the risk-free rate is higher. So as a result, you as a business, you bear more risk than the government. So you have to give a more attractive percentage, a more attractive return for it to be worth most investors to, look to take on your debt as opposed to just locking in free investments from the government. And then also, like Mr. Mukhtar said, there are angel investors. You could look at selling maybe equity or maybe a mix of equity and debt just to ensure that you ride out this particular period. Because one beautiful thing, depending on how you look at it, about the economy is that it is cyclical. So there are times where the government borrows heavily, and there are times where, the cost of capital is lower for businesses.
Okay, thank you so much for that. Now, before you go, if Nigeria's financial markets could speak today, like right now, what would they be saying? Are they saying confidence is back, or they're saying be cautious, opportunities are emerging, or brace up for another round of volatility? Which of them would you say it is saying?
I would say that a lot of factors, again. Of course, you can say opportunities are emerging because we have seen a proof of concept that now the market is, truly pricing in the strong earnings growth that we have seen on the stock market. And also the global market is also looking to, invest in Nigeria. So that's an opportunity that is emerging. At the same time, you might also hear the market say be cautious because the CBN is maintaining a high, restrictive monetary stance. The inflation is high and even rising. The NPR rate is 26.5%. The reserve rate set by the CBN for banks is about 45%. And even the money that is left is mostly going to these fixed income assets as opposed to being lent out to businesses, like Mr. Mukhtar has said. So there's a reason to be cautious in that sense a little bit. And of course, anything that has to do with the stock market involves volatility. So at the end of the day, you should brace for volatility. It's a mixture of all of them. But personally, the one that I am most sold by is opportunities that are emerging. Because if you look at the stock market and how it has done so far, if you look at the companies that make up the stock market and the fact that they are backed by strong earnings and strong performances, it shows that, yes, going forward, with or without international players coming to the market, we are on the right track.
We are on the right track. Okay, Mukhtar, are you still there? Now, who is actually making money in the market right now, and who is getting left behind. Mukta, are you there? Okay, I don't know
sorry,
what.
I think
Are you there?
I just got up.
Oh, okay.
Yes, can you hear me?
Yes, I can hear you.
Okay, so I think he has answered the question very well. Who is making money now is a different thing entirely. I think money is available for every investor, and I think every investor will also be making money. But I think you should not take your eyes off the financial sector. That will be where the money will still be there. The money will still be in the financial sector for a lot of investors. A lot of stocks are selling at a discounted rate in the financial sector. And also, the money also is also in the oil and gas sector. If you look at companies like Ara there, and then in the communication sector, also don't forget MTN is a gold mine waiting for designing investor to clip into it. So there, yes, definitely where the money is. I think the money is in the financial sector, it's in the ICT sector, it's also in the consumer goods sector. With the kind of recovery we've seen in companies like PZ and Unilever also, they are also creating opportunity for designing investor.
Okay, thank you so much, Mukta, for that insight and for being a part of the show. And thank you to you too, Victor, for making our time to join us on today's conversation. And now that's it from us on Business Lens. Thanks for spending your morning with us. My name is Divine Alex. Take care, make smart money moves, and I'll see you next time. Bye for now.